Hey everybody. I have renamed my weekly market report due to a little car crash last Monday that totaled my perfectly good and fully paid off Subaru. I changed the name to Market When You Get It because I think that's far less pressure and much more attainable goal for me. So, been a couple weeks, but here's your Market When You Get It report. Here are some things that are pretty relevant in kind of national world level. The residential rates today hit an all-time high. That's bad news. Fannie Freddie 30-year clocked in around 7.75 with an 8.1 APR, and that's kind of a, lots of data sample average. Housing starts are down, which is not good news for inventory and supply issues, but permit requests are up, so that's kind of promising. Existing home sales are down. Inventory is still historically low across the nation, and median sales price continues to tick up. It's gone up again. Median sale price for the United States is now 407,000. So that just continues to kind of tick up as demand stays high. The commercial rates came in a 5-1 arm around 8.5 and a 7-1 arm and a 10-year fixed at 8.625. And that brings us to the top of the economic things I'm watching. This commercial, it looks like so there is some commercial that's about to hit the fan per se, because of those non-fixed rate in the short arms. So for instance, let's say that you had a commercial loan that was around 700,000 3 years ago and you got 3 years annual fixed at like US Treasury point plus 0.275. And if that's the case and you're kind of in that rates adjusting right now, you went from around a 4% interest rate to an 8.13, and your payment this month would have gone from $3,500 a month to over $5,000, around $5,200 a month. So it'll be interesting to see how many commercial loan holders work that into their plan. We're prepared for that or have the sales and growth necessary to be able to absorb a couple extra $1,000 a month. That'll be interesting to watch. Also, that kind of goes with that, I put on my list, I'm watching the UK and the Canadian housing markets. I don't know if you're familiar with either of those markets, but they're going to have a similar reaction that we're going to see in the US commercial market because a large portion of the United Kingdom have adjustable rate. Well, they all have adjustable rate mortgages. Mortgages in the UK are reset every 2 years. So a majority of primary home loans are about to go from 3% to 9% between now and the end of November. In Canada, they're on a 5-year fixed. So anyone who refied or got a mortgage 5 years ago when their rates were low, that's in a refinancing period now. And through these high rates, those could just really greatly impact their primary home residential markets. And those will definitely trickle into US economy issues. But those are a couple of things I'm watching. Other things that I'm watching in the news, and these are all things that I believe will impact tenants, that will impact homeowners, that'll impact our ability to pay our inflation numbers that are outside forces. And one of the big ones I'm starting to hear a little bit more about is global food supply, because there are issues with rice crops. There are also issues with wheat crops. So between the Ukraine being like one of the main suppliers of wheat as a global grain to many, many countries, of course, the Ukraine wheat supply probably isn't so hot this year again, as well as droughts, natural disasters, etc. So watching rice and wheat production yields to kind of see how those are going to impact global food supply. Of course, that international shipping cargo problems, and how much that'll continue to impact supply chain, as we know, for builders and rehabbers and so many people impacted by supply chain, and those supply chain together with gas prices, etc., that can completely impact every price of everything that we purchase. family financial strains that are also going to be layered on top of those. Just rising gas and food prices are potentially those student loans that are coming due for repayment right now, and rising gas prices and the yields of those, very connected to global things. Rising insurance premiums as well are all going to be family budget issues that'll continue to be a strain. And just in general, like economic news, continuing to watch that inverted yield curve, because it's a very interesting condition globally or nationally that will certainly impact lots of things. Okay, a couple of weeks ago, the residential market, we talked about the year over year numbers, and these were year over year numbers. Last time, they have not changed a whole lot for this time, about the same. Still just really an low inventory, high demand, rising prices is still the story of the day. Our local market, these were your numbers from last time. And I went ahead and just put the next 2 weeks numbers on here to kind of show how they're changing, staying steady, about the same. So interesting that they are staying steady for this time of year. Typically, at the end of this month and the beginning of October, we start to see a downtick. Another very interesting, that median list price, take a look at that. I hope that is a fluke. That 252 jump is huge. That we hope that doesn't sustain. That's probably more than our market can bear for price increase this time of year. So we'll watch that one and just see, because those go up and down depending on if there's some big outliers in the market. But otherwise, it'll be interesting to watch fourth quarter. Hope everybody's doing great. Hope these videos are useful. Make sure and leave a comment if there's something you'd like to hear about, or if you're watching, or if they're helpful, so that we know we should continue them. Thanks for watching.